What's going on today, YouTube? I hope you guys all had a great day, and today I want to talk to you about a different analogy to think about how to be successful in the market. If you're new to my channel, I make daily stock market videos, teaching you guys things I wish I knew when I started, trying to cut you guys' learning curve a little bit. If you like this kind of content, subscribe to my channel, leave a like on the video, comment below if you have any questions, and share it to someone else that could use it. Today I'm going to use a little different analogy, and this analogy is going to be trading like a casino. Now, if you're thinking, what are you talking about? What I mean, casinos out there, every game they have set up, their worst odds on winning that is around 50%. Say blackjack and roulette are probably the two games out there that everyone plays that they have the best odds of winning. Now, how a casino wins. The odds are always in their favor. Okay, so on a roulette table, there are numbers 1 to 36, all black and red, and there are a 0 and a double zero. So that's 38 spaces. And your odds of winning roulette, they are 37 to 1. So you'll win, technically, if you bet on the same number every time, you'd win 1 out of 37 times. Now, here's where the casino gets you. Their payout is only 35 to 1. So if you would place $1 on every spot because you thought, okay, if I put it, I can't lose. You actually lose out on $2 every time you play. That is, quote unquote, the casino's edge. That is how they win. They always find out a way to minimize their risk and always have a reward. So, in trading in the stock market, if you want to be successful, you need to do the same thing. The way you do this in the stock market, if you are trying to be a day trader or a swing trader, you have to make your losses smaller than your wins. How you can trade like a casino. Go in for positions where you see the lowest amount of risk and you see more reward than your risk. Cut your losses consistently. Say if the stock's not planning out the way I want, I never lose more than 2%, which sometimes you can have morning gap downs that could lose more than 2%. That's just going to happen. But over time, if you cut your losses smaller than your wins are, you'll make out. I like to look for stocks near their year lows or all-time lows and see if they have a potential for a gain. And this is what every successful trader out there does. He looks to how he can minimize his risk and maximize his reward. So we'll just use this for an example. And this is not advice. This is just showing you what traders do to actually profit in the market. We'll look at this stock. We'll use NUGT for this example. Right here, it is near its lows. This is 6 months. We can look at 3 years. 3 years, low, 1392. Right now it's at 24. It's near its lows. It's not at its lows, but it's near its lows. So right here you go in. If you look at like technical analysis, it has a bottom here, it has a bottom here, to go down to here, and it almost looks like it's making a bottom again. So you expect it to bounce at this price level again. So if it bounces at this price level again, you expect it to hold here, and you're hoping for it to go back up to here, which would be a 15% gain, and ideally the whole way up to this line up here, which would be around 50% gain. But this is how you minimize your risk. It's near its 6-month lows. If it doesn't break this point and keep on going lower, it bounces here again, it's near its lows, you know your risk, and you cut your losses, say you cut your losses at 2%. You're going in for the expectation of it making 16%. So right there, 16 to 2, that's a 1 to 8 odds pretty much. That's how I look at it. It's 1 to 8 odds. My potential for profit is 8 times my potential for loss as long as I cut my losses. If I cut my losses at that 2% and I go in for trades that I see a greater potential for profit than a potential for loss. And if I'm wrong, I get out. Cut my losses. Yes, I know it sucks to lose money, but as long as you always make your losses smaller than your wins, that's how people are successful. And that's what a casino does. They make their losses smaller than their wins. They have so many more people going in there losing money than they do with people walking out. And I mean, it's proven. I mean, if they lost more money than they brought in, they wouldn't be in business. There would be no casinos out there because they didn't figure out a way to make a profit. And they don't just make money appear out of nowhere. They have so much money, and they're a company. They make money. That's because their games are set up for them to win. That's why they say the house always wins. So, guys, that was just a different way that you can look at trading. Think of it like a casino. Make sure you have a better chance at making a profit than you have a chance for making a loss. If you like this kind of video, you like this kind of stuff, make sure you leave a like on the video. Subscribe to my channel, leave a comment below if you have any questions, and share it to someone else that could use it. And I will see you guys tomorrow.